good morning. You're watching The Market right here on 80 Down with me, Aisha Faridi, Aman Dabash, Nikunj, Dalmia in the studio. And for yesterday, our markets managed to hold up pretty okay in an uncertain global movement. You managed to actually scale up and recover most of your losses. In fact, inched up in the green as well and only got closer to that 19,500 print, closer than that actually on the Nifty futures. So that said, it was a good 140-point recovery that you saw on the Nifty alone from the session lows. The Nifty Bank staged a smarter comeback, although didn't manage to quite hold on in the green, was still in the red by about 0.5% or so. And was actually the Nifty IT index, which staged a big comeback, led by names like Infosys, HCL Technologies, a whole host of these mid-cap IT names. And I think that's where the strength is.
So Aisha, it's a market which is, simply marking time. I can use the word consolidation, I can use the word range bound. Kunal would say it's boring and done. And some would also say lack of volatility. Yeah. That's the definition of a market which is simply marking time. There was a time in the market where you were buying high and you were selling higher. Now there is a time in the market you are selling higher, but you're waiting for good entry points, but you're buying selectively. So the whole approach of the market, I think, is very different. There's nothing wrong with it. Markets are never linear. Markets always follow a pattern. And I think right now the market pattern is visible, which is that markets are simply marking time. So there is no breakdown. There is no breakout. Large cap stocks are lacking trigger. And the scope of mid and small cap stocks in terms of the selection criteria, I think, is changing. The interesting bit for me this time, Aisha, if you frankly ask me, is that on a net basis, the FI flows are strong. But the flows from FIs are moving into non-traditional stocks. It is not your banks and consumer and IT stocks which are making a comeback. Money is moving into very different and unique companies, infra, or perhaps promoter-dominated power companies where Adani Group has sold, or JS Energy promoter has sold, or for that matter, Indigo. So for me, I think that is a big departure in terms of a trend where FI flows are moving. But I think the market, in terms of a mood point, 19,300 is important. This market ain't going anywhere. And now I think the twist of bank versus IT will start again.
Okay, but what are we working with when it comes to the global setup? A quick look at that. You've got all three indices in the US which declined, and you've also got the Asian markets off to a pretty rocky start across the board. In particular, the Hang Seng, which has tumbled nearly 1.5% to 2%. The Gift Nifty as well, just going to come up for you on your screens. What's the indication this Thursday morning? And well, it looks like it's off to a pretty tempered start, down about 15 points or so. But yes, you were talking about individual action, Nikunj, and the block deals really merit a mention. Of course, we know that GQG has been at the forefront when it comes to lapping up a lot of Adani Group companies, the latest one being Adani Power yesterday. And then there's been its entry into JSW Energy. And then we've also got Interglobe Aviation, where we spoke about the Gangwal family lowering their stake.
See, for the first time, you've seen multiple block deals where promoters are reducing their stake. And when typically promoters, they reduce the stake, you may ask yourself, okay, this money actually is not going to go into the company, and there is a new seller in the market. For example, Adani Group of companies, they've had very high holdings in their companies. JSW Group, they've had very high holdings in their very high promoter holding in their companies. Indigo, well, one promoter is exiting completely. Up until now, before that split happened between the promoters, Indigo ownership was very closely held by joint promoters. Now, why are we bringing this point up? Look, on a net basis, FI number will look strong. But on an absolute basis, this means the money is moving to a different stream per se. So the net picture is different, but in terms of the real impact the flows could have had if this money would have moved into an HDFC Bank or a Reliance or, for that matter, even an Infosys, the impact would have been very different. So for me, this is the reason why I'm bringing it out. Money is money. So the net number will look strong, but promoters selling, I don't think that's negative here. But it is a different kind of promoter activity or different kind of FI activity which is on. See, Aisha, now the size of some of these funds who are coming to India has become large. And if they try and buy this kind of an equity from the open market in some of these stocks where promoter holding is high, the impact cost could be very could be 15 to 20% higher. So it's not that promoter selling is negative here. It's just that the appetite for institutional investor is so large that they're finding it difficult to buy from the open market. But yeah, the net number will look strong when we look at the FI number and say, oh, number is strong. But paisa ja kahan raha hai? It's not moving in banks.
Yeah, it's only in blocks.
It's only in blocks, and that to promoter blocks.
Exactly.
And this traditionally these folks have not sold. So there is a new pattern which is emerging.
Yeah, absolutely. Well, the new pattern which is also emerging is for the IT sector, right? The US economic data has surprised large deals when it comes to HCL Technologies, or for that matter, that $1.6 billion deal that you saw from Infosys yesterday, from Liberty Global, that is. And you did see, shades of green actually emerge across the IT pack yesterday. In fact, valuations are now above the 5-year averages. And I think the bigger question is whether or not it's time to take that contra view. Is it time to start nibbling in at least into IT?
So Aisha, so let's understand the construct of IT. I mean, valuation is always this relative word. If growth come down, valuations will come down. A lot of folks tell me, okay, IT is trading above the 5-year average. How can we buy it? My point is that 5-year average, when the situation, if you look at the last 5-year average, the global situation was very different. So how can we compare with 5-year average? Where has the surprise coming from? In my book, the surprise has come in from the US economic data, which is and I'm not talking about inflation, I'm talking about the positive surprise. It is the data which, let's say, non-farm payroll data, or the US, industrial product data, or the kind of GDP growth data. That just tells you that the US economy is doing much better than what it was anticipated. So are we going to go through that phase where, because what happened in 2022, the decision making had slowed down, and given that the economy is normalizing, recovery in the IT space could actually happen? I think we are reaching there yet. We are not there yet. So one side you've got the typical bread and butter business which had got hit because of a slowdown problem and delay in decision making. And second side, I think, is the disruptive impact of AI. And unfortunately for the IT sector, they both have come at the same time. But at least for one space, which is the bread and butter business, which is related with IT, which is related with banks, which is related to the US economy, the dark clouds are fading away. I mean, I'll stick my neck out and say that the darkest dusk, I think, is over. But for the AI-dominated business, I don't know where the future is headed. So IT will have to limp back. It will not run. The difference is that it's not going to be V-shaped rally. It's going to be those gradual stock-specific moves which will start coming out. But needless to say, I get a sense, based on my conversations with a lot of market men, that we have a bottom in place for IT, and IT has scope to outperform, let's say, in the short term.
In fact, that's exactly what Hiren Ved as well told us just yesterday. Let's hear out his opinion on IT as a sector.
I'm not as bearish on tech as most people are. Yes, we are going through a slowdown patch, but my sense is that AI will actually accelerate tech spending. I think that every company will have to adapt AI into their processes, and they will need products and tools and Indian IT services companies to help them to use that AI into their businesses, right?
All right, that's the word coming in on IT. Perhaps the worst is now behind us and a bottom is in place. Well, let's also take cognizance of what's happening when it comes to the global commentary. Remember, we're waking up to pretty tempered cues day after day. It's been a rocky start to the month of August. What are the global commentators saying? We've got Vinny here to sum it up for us. Vinny, morning.
Good morning, and let's not forget we had that FOMC minutes of the meeting that had come in, and what it's showing and what it indicates is, there are a number of officials that saw some risk on the Fed goals as two-sided, one highlighting significant upside risk on inflation, while some saw a downside risk on the growth despite inflation. Now, on the back of that, we have a commentary that has come in from Mohammad Al-Arian, who's saying that, there's something for everyone in this minutes. He's quoting him, he's specifically highlighting that from the minutes, there's a lot for one on the one hand, and as well as on the other hand as well. He's saying that worries about the significant upside risk are there to the inflation versus uncertainty about the cumulative impact of the past hikes. Now, he said that there are mixed views in terms of economic prospects that are there, and perhaps most surprising given the unanimous vote in the July meeting, in contrast to what we saw in coming from the Bank of England. Also, in terms of what he's highlighting is that some of the Fed officials felt that the central bank should have not taken a hike at that meeting as well. And let's not forget, he's highlighting the Jackson Hole Symposium that will be there next week, which is an important event to watch out for as well. So keeping an eye out on that one. Moving on, we also have a commentary coming in from Lawrence Summer. Now, he's saying that he would guess that these higher long-term rates are here with us to stay, is what he's highlighting. And if he had to bet, he thinks that they were more likely to go higher than go lower from now onwards as well. So yes, higher rates are here to stay is what he's highlighting. Also, he said that he's concerned that they will become an object to China's frustration and that will tempt them to lash out. So on the China front also, he's talking about some updates coming in there. Peter Schiff also highlighting in terms of the economic growth that doesn't cause inflation. And in fact, he's saying that the weaker US economy gets, the stronger inflation will become. So yes, that's an important factor to watch out for, because if the economy will start going down, he feels the inflation will start going and getting more stronger over there as well. And overall, in terms of the Feds, he said that Feds ends up monetizing the debt. More money chasing fewer goods will be something that one should be keeping an eye out on. Lastly, we have the global commentary coming in from German Chancellor, and he's saying that Germany economy is going through a very challenging time as of now. Energy prices still need to come down further for them, and Germany is well positioned to deal with the current problems, but surely keeping an eye out on that.
Thanks very much, Vinny, for summing up all that talk coming in from the global commentators, and particularly post that FOMC outcome. Let's move right on then and connect with our chartists. We've got Kunal Bothra right here with us in our studios, as well as Naresh Mirani. Morning, gentlemen. And Kunal, going to begin with you. What's your assessment of the market? Because we've been talking quite a bit about, the fact that the intraday recovery has been evidenced in the markets, and the Nifty Bank Index, though, that has been a bit of a sore loser. So how are you looking at this dichotomy in the moves?
Good morning. So, I think the indices, the Nifty benchmark index is still holding up the 90,300 mark, even though we've had 2-3 attempts towards a break of this 90,300 levels on an intraday basis. But we've managed to protect this level on a net-to-net basis. Now, there are two observations which are very interesting. One is that the premiums for the indices, both the Nifty and the Bank Nifty, have shrunk significantly. So we started off this month, I think if I'm not wrong, at 120 points odd premium for the benchmark index for the Nifty, and now we are almost at a 35 point premium net for the index, and we are almost at the mid of the month. So that itself indicates that the market sentiment throughout the month has been a bit more negative or pessimistic as such. On the Bank Nifty as well, the premium has shrunk from 400 odd points to 125, 140 odd points, which is the average for the last couple of days. Now, the other way to look out for is that what we've also seen is a shrinkage of open interest for the Bank Nifty, specifically in the last 3 to 4 days. We've seen almost a cut of 6% to 9% open interest in the Bank Nifty in the last couple of trading sessions. So even though we've had intraday bounces, but the net direction for the data indicates that it's still skewed towards unwinding of long positions rather than building of fresh shorts. In terms of technical levels, 90,300 remains to be a crucial support. Until the time we don't close below this level, I would wait out for initiating a fresh short on the Nifty.
Right. Naresh, hi, morning. Help us understand whether you think IT can give a meaningful comeback from here.
So IT as an index has been tough to take a call right now, because every stock in the sector has done very, very differently. So we've seen a larger bounce in the mid cap and the small cap IT names. In the large caps, we've not seen a meaningful bounce in an Infosys. We've just seen a bounce right now. So everywhere the trends are very different. So overall, the view is the same. We'll go sideways on the large cap side. The outperformers could be HCL Tech and Tech Mahindra, which look promising. They've had the fastest recovery from the recent lows as well as from the September lows of last year. Could continue to see sideways move on TCS and Infosys, and Wipro remains a laggard. So that's the view on the large cap IT. On the broader space, the mid cap IT has already done quite of a move, so one needs to be cautious here. We've seen the largest bounce in many names. So time to be a little more cautious. Expect some more sideways in IT before it starts making a run.
We're cautious, expect more sideways move on IT before it makes a meaningful comeback. But let's talk individual stocks. Kunal, what's on your list?
So I'll go with one buy and one sell. The first one remains to be a barn, Manappuram Finance. Very interesting chart. The stock showing signs of relative strength, outperformance with respect to most of the other peers. And it's also perched at a swing breakout about that 148 mark. So would suggest a buy, 158 as a target, stop us at 144. Titan remains to be a shorting candidate, especially at a point where the stock has bounced some 100 rupees from the previous lows of 2,900 approximately. So would suggest a sell, retesting, expecting a retest of the previous lows, 2,900 as a target, stop loss at 3,060.
All right, let's find out Naresh's top recommendations. Naresh, what are you flagging off today?
So being a little defensive, looking at large caps, first is a buy in Mahindra and Mahindra. The stock is back into the outperformance zone, not far away from an all-time high. Good recovery from the lows, setting up for a fresh breakout above the 1600 mark. So a preemptive buy here with a stop loss at 1530 and a target price of 1700. Second is a buy on Power Grid, which corrected from 265 to 268 down to 240. In the last 3 sessions has recovered towards 248 levels. Showing a lot of relative strength, and the whole power sector continues to remain in focus with the broader power names doing really well. So Power Grid has some to catch up, go towards 270 levels in the short term, stop loss to be placed at 242.
All right, there you have it. Those are some of the top stocks to watch out for that our chartists are flagging off. But in the meantime, as always, let's discuss some important newsmakers in trade, and Anisha is here for just that. And let's start off by discussing NTPC, that's on Bernstein's radar, and they're pretty optimistic.
Oh, well, yes, they've initiated coverage, and they've initiated coverage on the positive side with the outperform rating and a target price of 274. Now, they highlight a couple of factors. A, with respect to NTPC, they say that right now when the country is focusing in on renewables, it's only a couple of players that are actually willing to put money when it comes to the thermal power. It's not that thermal power need is going away completely. We will be needing it going forward as well. And the only company which is willing to put bet there is right now NTPC. So that point is underappreciated. The other thing to watch out for is, of course, the renewable portfolio as well of NTPC. We usually don't talk about it because it continues to be very, very thermal heavy. But the biggest differentiator for a renewable company is usually the cost of funds. And given that this is one of the highly rated companies in terms of having the sovereign backing, etc., the cost of funds for NTPC is low, and that's why they have that extra fillip when it comes to the returns on renewables as well. Of course, the regulatory risk is very limited for NTPC because the next revision, which is likely to happen, is expected to happen on the similar regulated ROEs as well. And of course, there's backing of dividend yield, etc. as well. So Nikunj, of course, we have seen at the start of this year, since the start of this year rather, the entire power space has seen this new spark per se, right? Now, everybody is talking about it, one of those value zones, right?
So Nisha, the big picture argument for power is simple, which is that there is going to be a huge surge in power demand, looking at how the capex cycle and where the bent of the economy is. Now, the best way to bet on power, in my view, I think is still go towards the renewable space, because that's more clean, that's where efficiency is high, and that's where I think the future capex would be moving in. But specifically to NTPC, look, Bernstein is coming with this whole thought at 274 rupees, and a lot of market men have actually bought into NTPC at 217 rupees, and a lot of market men have bought into NTPC with the same logic, let's say 6 to 8 months ago. My challenge with a company like NTPC is that, ultimately, when you are nearing that election period, Anisha, you'll always see this whole narrative of free Bijli which will start. Rajasthan has already started that, and looking at the fact that there are state elections and then followed by a central election and inflation is making a comeback. Sensitive utility like power, irrespective of whether real pricing is moving, I guess there could be some compromise which will happen purely looking at the election cycle, which is where we are. That's concern number one. Concern number two, what I don't like in the Bernstein report is that good old comparison. Okay, NTPC is cheaper than what the private sector peers are. That is the reason why you should buy NTPC. But private sector peers have a different business model. They have different return ratios, and they have a different profile. And I think that is where NTPC is unlikely to command this premium. While optically power as a sector will continue to do well looking at the power reforms, but the chink in the armor is state election cycle followed by central election cycle, Mehengai making a comeback, and the fact that the NTPC stock has seen an extraordinary run up from the recent low.
Anisha, M&M Finance was though quite a miss, right? What a brokerage is saying.
Yeah, the earnings had come earlier. It's just the follow through, brokerage notes and thought process which is changing a bit. And Morgan Stanley has actually written a note. The NIMs in this quarter gone by was a bit of a miss, and the net interest margins have been on a bit of a declining trend. And the reason is that the product mix of the entire company is changing, and that's why Morgan Stanley is saying saying that there's downside risk to loan yields in addition to the upside risk to cost of fund. And Nikunj, this is what you were explaining as well, right? That entire thesis which was there earlier, while why NBFCs were getting a preference over banks, is getting a bit undone now.
See, I like this Morgan Stanley report, and typically, Avan and we've discussed some of these reports in the past, the research idea from Morgan Stanley. So this is actually a tactical idea, Avan. And in this tactical idea, what are they defining? We estimate there is a 70 to 80% probability. Wow. Wow. 70 to 80% probability that Mahindra Finance in the short term will fall. And short term is 60 days. And Morgan Stanley has got this innate habit of getting these tactical ideas right. So folks, if you're listening, the tactical idea. I think the logic is very simple. Look, logic is very simple that when you are nearing, when the inflationary concerns are coming back, that's the time NBFC stocks, they tend to underperform. When inflation concerns, they start fading away, NBFC stocks, they tend to outperform. So now the inflation concerns are making a comeback. Now whether it is transient or whether it is going to be stubborn, that we don't know. That will only be judged looking at the way our vegetable prices would move. And I've been told the tomato prices are still at 130 rupees, even though the fresh crop of tomato has hit the market. So I don't know where inflation is headed, but we know for sure that it's not going to come down in a hurry. If that is the case, then NBFCs will underperform. Within that, M&M Financials, they've had the challenges in terms of where things are moving in terms of book quality, rural economy, and their whole projection in terms of where the earnings are moving. So I think that is the reason why Morgan Stanley has come out with what could be called as a tactical idea where they expect Mahindra & Mahindra Finance actually to underperform.
Okay, that's the take coming in on M&M Finance. Anisha, thanks as always for highlighting those names. Nikunj, an interesting note we were talking about before the show, right? CLSA and what they're saying about the two-wheeler industry. They're saying that competition is heating up in EVs, almost suggesting that ICE engines, it's time to say bye-bye.
Yeah, Bhavesh actually just made this point, and I asked that, okay, how do you react to the fact that, so Rajiv Bajaj made this very famous comment. Yeah. Champions eat oats. What is O? Ola. A is Ather, T is Torque, and I think I'm just forgetting the name of the brand, which the letter S, what it represents. I said, okay, how do you react to Rajiv Bajaj's comment? He said, I eat Dalia. Look, there is a logic in what he's saying that the entire two-wheeler EV space is much more efficient, much more eco-friendly, it is much more powerful, and it is something where the Gen Z crowd seems to be moving. But that is yesterday's narrative. Tomorrow's trend will be a function of affordability, it will be a function of functionality, and it will also be a function of adaptability. Now, we've had mixed review about how Ola has done and how two-wheelers have taken off, and also that FAME subsidy which was given to them, that has taken a back seat. This space would be an interesting space, Ash. If this space would have not been interesting, then a TVS and Eicher would have not really attempted to go into this space. So this is an interesting space. Now whether it will be oats and dalia or it would be chai or coffee, I don't know. Yeah, but all I'm saying is this is an interesting space. I think they both will coexist. It's like power. Yeah. Renewable energy and thermal will coexist. I think that will happen with the entire...
But EV will gain a larger piece of the entire pie as opposed to what's happening in the passenger vehicles, where the transition will take much longer.
Yeah, because in the entire passenger car vehicle, that dominance of ICE engine is very large. Yeah. And the comfort which you get from an ICE engine is very large. And frankly, apart from Tata Motors and a little bit of Mahindra & Mahindra, which is still proof of concept, we've not seen too many launches also. Yeah. Within the EV space, there's the new dominant market share, which now Ola is commanding and what Ather now has, and even the incumbents, so the legacy players are coming into it. So the disruption will be far greater in this space.
Yeah, in fact, CLSA is saying that Ola offers most options to customers in EVs, and that petrol scooters will be facing the heat from EVs. The onslaught of EVs, according to them, will continue. The shift to EV is inevitable, at least in the scooter segment.
Yep, and I was just completing that OATS, what it stands for. Yeah. Ola, Ather, Torque, and Smarty, Nikunj, is what Rajiv Bajaj
Ola,
had
Ather, Spark?
Talk and
Talk.
Smart
Oh,
E.
yeah.
Yeah,
Missed
that's
that one.
oats. And yeah, he had also spoken about how in the 150cc segment, above sports motorcycle, Enfield, Bajaj and TVS have a 70 to 80% share, so they are not lightweight. Okay, but Nikunj had a conversation with Bhavesh Agarwal, who doesn't really talk to the media, and let's hear out what he had to say, his response to Rajiv Bajaj's comment, as well as his view on the EV market.
So what do you have to say to Rajiv Bajaj's definition of oats? That we eat oats for breakfast. How would you react to that? Actually, I haven't heard you react to that at all.
हाँ नहीं देखो दलिया तो हम भी खाते हैं हाँ वो लोग ओट खा लेंगे हम दलिया खाते हैं एंड उनको दलिया खाना है तो आ जाए मेरे साथ दलिया खाएंगे साथ में
चलिए as media, हमको oats और दलिया दोनों मिलेंगे, so we both are very happy.
with a premium scooter product, which is the S1 Pro. And we announced a whole range of products at different price points, starting from 80,000 rupees going up to 1.5 lakh rupees. So now we have a portfolio starting from absolutely at the entry level of scooters, equivalent to the ICE price point, and going up to 1.5 lakh rupees, which is our premium product, which is frankly the best scooter money can buy. And we believe with this kind of a pricing, consumers will find EVs fundamentally better than ICE vehicles. Because not just is the upfront price now equal to ICE for our EVs, but also using an EV is so much more cheaper than using petrol vehicles or ICE vehicles. Because petrol rates only go in one direction, whereas electricity is much more accessible and cheap, and the EV vehicles are much more efficient. So the running cost of an EV vehicle is roughly 1/10 or lower than a petrol vehicle. And now if you buy an Ola EV, every month you save 2,500-3,000 rupees. So in a year you save about 30,000 rupees. So it's buying an Ola EV or buying frankly any EV, not that there are many at this price point, but buying an Ola EV actually allows you to do better for the planet, but most importantly do better for yourselves and for your wallet. And I believe, Nikunj, to your earlier point on legacy players, right? Now they might comment on the sidelines that EVs are not the future or that EVs are not price competitive. We have changed that. And now actually the gauntlet has been thrown to them to react and to bring exciting EV products, competitive EV products to the market and compete. Because it is quite clear that ICE is over in scooters. And what we also did, Nikunj, is we showed our scooter portfolio, but we also painted a vision and a roadmap for our motorcycle segment. So we are actually moving the game from scooters into motorcycles for the next couple of years.
So what do you have to say to Rajiv Bajaj's definition of oats? That we eat oats for breakfast. How would you react to that? Actually, I haven't heard you react to that at all.
हाँ नहीं देखो दलिया तो हम भी खाते हैं हाँ वो लोग ओट खा लेंगे हम दलिया खाते हैं एंड उनको दलिया खाना है तो आ जाए मेरे साथ दलिया खाएंगे साथ में
चलिए as media, हमको oats और दलिया दोनों मिलेंगे, so we both are very happy. The fact that the FAME subsidy has been discontinued, is that indirectly good news for Ola? Because you are a market leader, and typically when the subsidies are reduced, the market leader always tends to gain much more in terms of market share and dominance.
Nikunj, firstly, I want to actually acknowledge the kind of visionary work the government has done over the last many years, where government has set a very clear vision for electrification of India. Government has set up a very, very enabling policy and incentive environment. This is what countries which have a strategic vision like China, US, Europe, they have also done it in their ecosystems, and the Indian government has also been very forthcoming, visionary in terms of doing that.
Back with the market right here on ET Now after yesterday's comeback somewhat. This morning, though, the SGX Nifty or the GIFT Nifty is once again indicating about a 70-odd point downtick for us. So let's see which way the tide actually turns. But a lot of stocks and sectors which are going to be in focus this morning, and the cabinet has approved the upgradation of railway lines across 9 states. Along with this, it also gave the nod to electric bus services in 100 cities under the PM e-Bus Seva. Prakash Priyadarshi, my colleague, joins in with all the latest.
The Indian cabinet has taken several important decisions today, and the first one is with regard to green mobility segment. Indian cabinet has approved a new scheme called PM E-Bus Seva, a very comprehensive scheme that will connect 100 cities out of 169 in the country. The scheme will be carried out on PPP mode, and for that, Cabinet has accepted an overall financial outlay of rupees 58,000 crore, out of which rupees 20,000 crore will be contributed by the central government of India, and there will be contribution from the state governments as well. Therefore, a very comprehensive scheme that has been accepted by the government of India when it comes to promote green mobility in the country. Moving ahead, when it comes to Railways Department, Indian Cabinet has accepted the proposal that has been set by Ministry of Railways for modernization, extension and doubling of certain railways line. Cabinet has given its go-ahead for modernizing and doubling of 7 railways line with an overall outlay of rupees 32,000 crore. These projects will cover 35 districts and 9 states in the country. In addition to that, Cabinet has also decided to extend Digital India program with an overall outlay of rupees 15,000 crore. As you are aware, the government is already moving ahead with very comprehensive Digital India program to strengthen digital infrastructure in the country. Last but not the least, Indian Cabinet has also accepted a new scheme called PM Vishwakarma scheme to support traditional trade in the country. Cabinet has accepted an overall outlay of rupees 13,000 crore that will be given to beneficiaries. Beneficiaries will get rupees up to 1 lakh at 5% rate of interest with the interest subvention benefit.
7 प्रोजेक्ट्स अप्रूव हुए हैं 32,500 करोड़ रुपीस के। सातों के सातों प्रोजेक्ट्स बहुत ही इम्पोर्टेंट है। देश के 9 राज्यों में 35 डिस्ट्रिक्ट्स कवर करेंगे और टोटल इसकी लेंथ है 2,339 किलोमीटर्स इससे ऐड होंगे। जो राज्य जिसको डायरेक्ट बेनिफिट मिलेगा उनमें है उत्तर प्रदेश, बिहार, तेलंगाना, आंध्र प्रदेश, महाराष्ट्र, गुजरात, उड़ीसा, झारखंड और वेस्ट बंगाल।
Time to connect with Hemang Jani, who joins in on the show with his fundamental take. Hemang, let's begin with the view on IT then. We were just discussing earlier on the show how perhaps now it's time to take a contra view. Yes, there have been a lot of negative surprises, but do you think that's now a thing of the past? The large deal wins, the overall economic data in the US surprising, valuations above 5-year average is also all going to bode well?
I think IT as a pack, we have had a little bit of, successes and failures both when we look at this earnings season. And though the sector has underperformed big time in last 1.5 years, the fact remains that the incremental cues which are coming from the US economy, the tech spend, and the margin, outlook are not that clear. So I think it would be good to have a stock-specific view when it comes to IT and look for the companies where the earnings have been good in challenging environments. So in the large cap, let's say, for example, TCS has delivered a good set of numbers, stock has corrected. So maybe one should look at it. Apart from that, the mid cap has been an outlier. So you have, Emphasis, which has done extremely well, Coforge, which has done very well for itself. And you have certain pockets which are product-based companies which have done well. So I think it makes more sense to have a stock-specific approach when it comes to IT at this point of time.
Okay, keep it stock-specific when it comes to IT. That's the word coming in from Hemang. Couple of stocks which are going to be in focus and was yesterday as well. JSW Energy, wherein the promoter has sold 2 crore shares via a block, and we understand the GQG fund has been a buyer here. There's also Adani Power, wherein once again GQG has acquired, almost 4% stake, and that approximates to about almost 9,000 crore rupees via a block once again. And then there's Religare Enterprises as well, wherein we told you first that the Berman family has bought 5% stake via blocks, and Investment Opportunities has been the seller here. Hemang, are you just keeping the powder dry somewhat and watching what tide the market takes in the event of not finding many value opportunities right now in the market?
I do think that having seen a very strong up move in the last 4 months, the market is going through a bit of a consolidation. The global setup is not looking that great. After a much better inflation data in US, if you see, we have seen some weakness persisting, and the recent commentary and the outlook on the inflation and what Fed could possibly do to contain that will not surely go down too well with global markets. So, in that kind of a scenario, it makes sense to be a little light and look out for opportunities, because the fact of the matter is that the index or the bank Nifty has underperformed, but the broader market is continuing to see a lot of momentum. So I think it makes sense to kind of be a little cautious at this point of time.
I'm going to just switch gears and talk about Jubilant Foods. Hemang, this is one company where the promise has been very high, but unfortunately it has not really lived up to the brand it has and the franchise value it represents. Why is that?
I think, Nikunj, typically there is always a case of hype around certain pockets and certain franchise that the company presents, and the kind of valuations that we end up giving to such companies is so much that it becomes difficult for the company to actually deliver. Now, the QSR space has done exceptionally well, and I think we are still at a nascent stage when it comes to the overall growth potential. But once the stock starts trading at 50, 60, 65 kind of a PE, and intervening period, as we all know, gets too dynamic. So it's very difficult for the companies to deliver on a quarter-on-quarter basis. So they changed the business model. They came up with exotic, dishes, but the delivery was not so good. So I think market is a bit disappointed. But I think that space continues to look quite good. So whether it is Westlife or Jubilant, or for that matter, Devyani, I think these are the names where one should really take maybe 1 or 2 year kind of a view and continue to have in their portfolio.
Okay, let's look at the top companies in FY24 that have witnessed some of the highest EPS upgrades and downgrades coming in. Samit is here with that entire list. Samit?
Well, what we have done here is we have compared the FY24 EPS post the earnings season, what has been the upgrades compared to what the numbers were before the earnings season started. Now, what we're understanding here is that Zomato and PB Fintech are the only two companies that have seen more than 100% rise in the FY24 EPS, which means that their FY24 EPS has been upgraded by more than 100% by analysts. Now, this could be on the back of the fact that the Zomato reported a profit in the first quarter of FY24 and PB Fintech's losses were on the lower side. Along with that, there is LIC, HPCL, BPCL who have seen an EPS upgrade of around 29 to 44% on the back of strong first quarter numbers. Indigo reported its highest ever quarterly profit, and hence if you see the company's EPS has been upgraded by around 25%. Then there is Tata Motors, Seat, Suntech Realty, Lemon Tree, which have seen an EPS upgrade anywhere between 18 to 24% post the strong Q1 numbers. Now on the negative side, to everyone's surprise, chemical companies are not on the top of the list. There are very few chemical companies like Sudarshan Chemical and Gujarat Fluoro on the top 10 list who have seen an EPS downgrade of around 22 to 26%, but it's V-Mart which has seen the biggest downgrade in their EPS of around 88%. This is after the company reported a surprise loss in the first quarter, while the outlook also continues to remain a bit sluggish. But then there is Sagar Cement, which saw an EPS downgrade of around 29%, largely on the back of their high cost raw material and because of lower pricing power. Then there is Nykaa, which have seen an EPS downgrade of 27%. Mahindra Logistics has seen an EPS downgrade of 23% because of delay in its integration with Rivigo. Along with that, there is Healthcare Global and Laurus Lab, which have also seen an EPS downgrade of around 18 to 20% because of weak outlook and weaker first quarter FY24 numbers.
Amit, we'll leave it at that. Not surprised that the maximum upgrades are actually coming in for a Zomato and a PB Fintech. But Hemang, wanted your thoughts in on these names, right? Because they've almost doubled from their last year lows. I mean, from 40, in fact, Zomato is now 90 thereabouts. Still a buy, you think?
In terms of the way the company has gone about managing the disaster that was there a year and a half back to its business model, the way the company was going about doing acquisitions. We've seen a massive turnaround, and the management has done very smart thing in the last 6 months, and which is what is reflected in the way the market has actually re-rated these stocks. Now, having seen this, that kind of an up move, the fact remains that the incremental data points in terms of the traffic, in terms of the company turning profitable before its guidance is definitely great. But I think in the current scenario, you might really want to wait for a 10-15% kind of a dip in the stock before you get into it, because we are no longer in the momentum driven market, So I think the storyline is very good. The potential is great, but it makes sense to kind of wait for some small correction before you enter.
All right, what a mover Zomato has been of late. Well, let's shift gears and put the spotlight right back on IT. And who would have thought that it's right back on the gainers' radar in the month of August? Nikunj, we're flagging off a number of factors, valuations, and what has happened in the last 3 months.
See, don't go by the gain in August, because in the preceding months, the fall was very alarming.
Phenomenal.
So it's a function of how you count and from where you count. Data is something which you can always mince and match up to what you really want to do. So it's up. Now, the minute you look at the extension, it's up 4% in 3 months, which is not great considering where the sector was. The fundamental thesis for IT, I think, is two. One, the US economy is slowing down. And second, AI disruption is a reality. You cannot close your eyes to the disruptive part. Now, no one knows how long the disruptive impact of AI would be. The jury is not out. It's like split right in the middle. But on the bread and butter business, which is what we understand and which is more predictable, I guess it's not a silver lining, but it is like a canary in a coal mine.
The deal wins have been picking
The deal
up.
wins have been big. Why deal? And also, the US economic data, this is macro data, is looking much better than what the economists had predicted at the beginning of the year. Now, what is the US economic data we're talking about? Okay, this is valuation. We'll come back to it. Let's look at the US economic data. I promise I'll come back on valuations just to give a flavor there. Now, this is where the US economic data is. The retail sales have been strong. Housing inflation is making a comeback. US farm payroll data is also strong. So the macro data in US is better. If the macro data in US is better, all the delayed decision making which had happened because of this crunch situation post Ukraine and Russia, those decision making processes started. So the bread and butter business could see a revival. So that's 50% of the trouble. But the remaining 50% of the trouble is AI, which frankly nobody knows. Now let's understand margin of safety. That's what you look at. I mean, if you're buying IT, are you buying them at cheap valuations, or are you buying them at valuations which are still stretched? On that yardstick, you would say that the P multiples for most of the IT companies are nearing what could be called as a 5-year average. So if you chance your arm there, if you chance your arm now, valuations are on your side. One wheel which was in reverse gear seems to be stabilizing. So I expect that IT actually could outperform going forward, looking at the lay of the land.
Okay, that's the take coming in on the entire IT sector, Aisha.
Oh yeah, that's the view on IT. In fact, let's just move forward and let's talk about some of the other names as well, which are in focus this morning. And we were earlier highlighting about what the view is currently on the entire power sector. And Anisha flagged off as to what brokerages are now saying about NTPC. Bernstein, for instance, has initiated an outperform, a target price of 274. They're saying that they actually play a key role in transition to green energy, which is underappreciated, and that they have limited regulatory risk and that valuations are below the long-term averages. Hemang, any of the power or the ancillaries that interest you right now?
I think from a short-term tactical perspective, because of the MSCI rebalance, where you will see incremental flows, coming into the name like PFC, REC, also the fact that Adani Power, we had GQG, coming in and picking up some stake over there could create some more momentum for Adani Power and generally for the mid-cap utility companies. So I think from a short-term perspective, that sector could give you some momentum, maybe 5%, 10% kind of an up move. But I do not think that one should really consider, proper long-term investment in these kind of names, because when it goes out of flavor, then you might see a little bit of subdued movement for an extended period of time.
Okay. Adani Power, 279, GQG has checked in. Very interesting that GQG has checked in Adani, they've checked in JSW. Very, very interesting in terms of the profile and the nature of some of the stocks they're buying. Nuresh, Z, talk of the town last week. This week, the thunder is missing.
So the stock did a good enough move. So it went up from 240, 250 on the day of the last announcement. The stock went up to 290. Now, even if we go back to the first move which happened on the initial day in September, the stock had gone to 260 to 270 levels over the next two sessions. Then we got the Sony merger announcement, and then we went towards 350, 360 levels. So I think in the near term, the move is done. In between, again in March of last year, the stock had bounced back to 290, 300. So it needs much more clarity to now cross 290. 290 has been a high in last March as well as in October of last year. So there are multiple highs around 290. So for now, I would expect it to stay between 260 to 290 levels. It's only on a break about 290. It becomes a fresh breakout and then scale up higher. So as of now, the view is it remains sideways, but the view changes if it can sustain about 290. It becomes a momentum trade after that.
Oh yeah, both JSW Energy, Adani Power, both these names were the ones which were buoyant yesterday after GQG Partners upped its stake and bought in via blocks. Some of the stocks which are not going to be all that impressive this morning are Cipla. The Patan Ganga US FDA license has been suspended now for 10 days. In the month of December. M&M Financials as well, wherein Morgan Stanley, after their numbers, believes that there is a downside risk to loan yields, and that's going to be the other stock to look out for as well. But talk about the buzzers yesterday. Indiabulls Housing, and this was, Kunal, quite the curious case, right? A downtick of 5% after the numbers and a big swing, so almost a 10% move from the session lows.
Yeah, I think it was a strong move or a powerful move for Indiabulls Housing Finance because the last 1 or 2 months, the stock has seen a very good recovery. Now, when you try and compare this with the previous recoveries, there is a lot of substance in this recovery because the volumes on an average for Indiabulls Housing in this leg of uptrend, especially in the last phase of this price rally for the stock price when it had hit that 170 odd mark, was quite substantial. Now the stock has broken past above a double bottom formation on the daily charts, but I would probably wait out for a retest of the previous highs of 172. That's going to be a breakout point for Indiabulls Housing. It's very close towards that level. I think last week or so the stock tried to break past above 172 mark. It failed to sustain about those levels and then it fell down back towards 160 and below. So I would wait for a retest as well as a successful close above that 172 mark. That could really change the tide for the stock over the near term. So for example, just to give a like-to-like comparison, what happened with Z at the 210, 220 mark, which was a huge resistance, and the stock managed to give a breakout post that levels. I think for Indiabulls Housing, that level is close to 172.
Okay, let's get you some more stock ideas. Here's Vinit Bolinchkar telling us why he's bullish on Welspun India.
Welspun India is one stock which is out of the radar for everybody. And I think that stock has the potential to do exceedingly well over the next 5 years. My reasoning being that the home textile business has got back its margins again. If you see their B2C business is clocking along quite nicely. Towels, bed linen, as well as their wooden flooring business is coming along very well. Their capex cycle is over. We are going to expect margins going to between 10 to 15%, EBITDA from zero as of now. And the way their B2C platform is building up in the consumer discretionary space, I think there could be a very, very sharp re-rating on this stock. Not to forget, that they would also be debt-free by then.
Top holding has been Ultratech, and we added during the chaos of Adani both ACC and Ambuja, and it has richly rewarded. ACC Ambuja combined have a 55 million ton capacity, and you can see the aggression. They are acquiring smaller players. Pricing is back, and I think Ultratech with 128 million ton capacity is going to rule the roost. So we think cement prices are going to harden after this monsoon, and the monsoon has been rather severe, but I think it's abating now. And I think price rises will be across the board. Look, construction and infrastructure are the best plays now. Cement consumption is at an all-time high and it's only going to get better. And I think if you are in pedigree names like Ambuja, ACC and Ultratech. Ultratech, by the way, as a disclosure, is our top holding along with the other two.
I'm just looking at few names from the pharma space which have gone against the trend, and one of them is actually Alchem Laboratories. Alchem Laboratories has a very strong domestic facing business, very strong in terms of the antibiotics, very strong in terms of antibacterial medicines which they do. And that stock this year is up 26%, but in last 1 week, I mean, is the data right? Yeah, 10% down. Other one is actually Nykaa. The third one is BSC. Then you got City Union Bank. So it's not like there are no losers. No? There are a lot of losers also. Alchem, Hemang, do you track this one?
So Nikunj, a very steady kind of a company, and the numbers were pretty much in line. The management con call, they've guided for 200 basis point expansion in the margins. There was a bit of an issue in terms of shutdown, etc. But when we look at the pharma space, where we are seeing a bit of a revival, particularly the US generic market. So any meaningful correction in the names like Alchem do provide a good entry point. I think given the overall performance, the outlook, this is surely one steady stock that one can really get into for a 15 to 18% kind of an upside.
Info Edge, Nuresh, the other one which has turned in terms of where it was versus where it is now. Is the bull market in Info Edge stroke Naukri over, Nuresh?
Not really. The stock gave a breakout and is retesting the same level. So 42.50 was roughly the breakout point. Did a breakout move into almost closer to 5,000. Has seen a dip over the last 2 weeks. But I think closer to this price point of 42.50, 4,300, I would expect a bounce from here. It's only when we start going below 4,100 it changes trend. But looks like it's gone through a good enough consolidation. Very similar to what happened with new age companies. So the stock was at 5,000 rupees back in April, May, where it broke down, went to sub 3,500 levels. And we are still around this area wherein we've spent almost 12 to 15 months in this case. So the view is at 42.50, 4,300 actually is a risk reward buy, wherein we again go back slowly to 5,000. And once we cross 5,000, that is where a bull market starts in terms of momentum. For now, first indications are there in terms of consolidation being done and slowly and steadily gaining pace.
Couple of other names which were big buzzers yesterday, and a spike coming in on a JBM Auto as well as Electra Green Tech as well, after the cabinet approved that e-bus Seva. 100 cities, remember, are now going to be connected through this e-bus services, and it's an approved overall outlay of 57,600 crore rupees. 20,000 crore rupees is going to be contributed by the central government. So big move coming in on both these names. That was pretty much the case with the likes of an RVNL and JSPL as well, after the cabinet approving that 7 multi-tracking project worth about 32,500 crore rupees. So railway capex continues to find mention amidst all the government policies. Hemang, just wanted to understand your thoughts on the railway stocks and whether you think the media part of the rally is behind us, or do you think the story is still going to go as strong?
The overall story will continue to remain strong because of the way the government has gone about, upgrading the infra, ordering for, wagons, and the entire, ecosystem around it is showing a lot of momentum. So I think that this story will go on for another probably 1 year or so. Of course, you will have some pauses in between. So maybe, names like PEML or Titagar Wagon, IRCON, RVNL, these are the stocks where one could definitely look at, playing this momentum and theme from a 6 to 12 months kind of a perspective.
Okay, fair enough. Meantime, there's also a note coming out from Jefferies on the overall quarterly earnings, and they've said that ex metals and oil and gas, the earnings growth has been about 20%, and the continued strong rush of earnings has been seen this quarter. What we've witnessed in the last 3 years, domestic companies as well have put out strong earnings growth, and select pharma, autos, and PSUs have seen upgrades. Hemant, just wanted to get in your thoughts then on the US generic-driven pharma companies as well that have put out fairly decent set of numbers. What's been your take on the quarterly performance?
Quarterly performance has been by and large good. Whether you look at Sun Pharma, Cipla, Dr. Reddy was a standout, performance and exceptionally good outlook also. So I think after a long pause, we are seeing that uptake, and looks like that generic opportunity will remain pretty good from a medium to long term perspective. So I think Dr. Reddy and Sun Pharma are the two names where one can really take a medium to long term kind of a view and play for 18-20% kind of an upside.
Interesting note from Morgan Stanley, and I love their tactical idea, coverage. 16th of August, Morgan Stanley. We believe that the share price of Mahindra & Mahindra Finance could fall relative to the country index in the next 60 days, almost like, prophecy. Given the high inflation print and likely elevated levels in the near term, we think NBFC stocks will miss on their NIMS forecast for Q1 FY25, and we expect that NIM-driven downside in the short term cannot be ruled out. Bottom line, they expect in the short term Mahindra & Mahindra Finance actually to underperform. And they've got a good track record of getting some of these, tactical research ideas, because historically that could be a function of liquidity, their understanding of where the flows are moving, and their understanding of some near-term adjustments which would be there. I want to go back to metals. Why? Because if China slowdown is real, then you can kiss goodbye to a lot of metal stocks which have made a comeback. And if metal stocks go off the radar, then will it be SAIL, will it be Hindalco, will it be Vedanta, will it be Tata Steel? In last 1 month, metal stocks did show signs of coming back. But in last 48 hours to 24 hours, the template for China has changed, and that in a sense has called a reversal in some of the metal stocks. And Naresh, it could be another false starts, right? Just when we think that metal stocks are getting ready, they're flexing the muscles, news from China again, punctures them.
Absolutely. So it's been a sector which made it stop some time back, and now we are in that cycle where it just keeps making this false starts. You'll see a move which does not sustain in the overall metals. But if we look at some of the names which have been clear winners, so like I've been talking about Jindal Steel as the clear winner, and the stock has surprised on the upside. The stock hit a new all-time high at 690, 700. The previous all-time high when the cycle topped was around 550, 580 back in 2022. So overall, one has to focus on the trending ones, which is Jindal Steel and JSW Steel. So if somebody wants to bet on the lower end of the range, on dips, it has to be these two names. But at the same time, if you look at specialty metals across the board, you could see what has happened to Jindal Stainless. JSL has done really well. You have a Kalyani Steel sitting a new 52-week high. You have a Sunflag Iron doing well. So I think the focus, a Godavari Power, Sarda. So the viewers in metals, one should start taking a step down and keep looking at the other names. They've been performing way, way better than the core metal names which we talk about.
Some of the defense names held out very smartly yesterday. Germany, Spain are now in contest, as we understand, for that $4.8 billion Indian submarine deal. And Indian officials, we understand, are currently evaluating competing bids to build 6 of the vessels in India. So Cochin Shipyard, Midhani, Garden Reach, these were all stocks which were in a tizzy in trade yesterday. Cochin Shipyard held out by almost 17.5% alone, and I think this is an all-time high on Cochin Shipyard. Garden Reach was the other one, an 18.5% uptick, no less, and Midhani being the other one. Kunal, momentum here to stay on these names?
Yeah, I think this is significant momentum over the last 6-8 months, 12 months or so for many of these stocks. In fact, in the month of June and I think good part of July, these stocks were going through their own phase of pause of consolidation. They were stuck into a very tight range, and those classic ingredients which you look out for, that when the stock consolidates, shifts into a tight range, volumes drop by, indicators come back to their from an overbought territory towards neutral territory or neutral to mid kind of a territory for the stock prices, and then all of a sudden you see the momentum spiking up for these stocks and volumes participation comes back again for these stocks. So we saw classical ingredients coming back into these three key names. Cochin Shipyard, yes, the stock is at a fresh lifetime high. GRSC also I think has done reasonably well. Midhani, the stock has off late, I think just last 4 or 5 months is where the stock has started to show signs of participation, but nevertheless the volumes have as well looked quite strong. So we can just expect that this trend would continue where these stocks go into a rally, then comes a phase of a pause, and it's the best time to try and accumulate the stocks in this phase of pause or consolidation.
Okay, that's an interesting take coming in on the technicals. Hemang, before we let you go, leave us with your top 3 mid-cap recommendations for the long term.
I would go with some of the mid-cap cement companies. So NCL is something which has done very well in the last, let's say, 1 month or so. It's a small cap 1,000 crore cement company, and the numbers were exceptionally good. And you do hear more and more M&A related transactions, and that could re-rate the entire sector. So NCL can give a 25-30% kind of an upside. And apart from that, I think VIP Industries is another stock where we've seen a good amount of momentum and again M&A kind of a play. So I think these are the stocks where in a subdued market you could see because of certain corporate actions which are likely to happen.
The M&A and VIP, I don't know. Please help us. Hemang?
Sorry, Nikunj, I missed your question.
What is the M&A which you refer to in VIP? Because I mean there is a buzz. But what have you heard?
The current stakeholders are looking to exit, and recently the CEO also had exited, and that could be acquired by one of the existing large luggage company. So that is something which could actually create a lot of excitement, and given the way the entire this space is buzzing, and the kind of franchise that VIP is commanding, the premium could be about 20-22% to the current market price. But this is based on what is something that we are hearing from the market. There is absolutely no official statement from the management as yet.
Rupee is at 83. Benchmark yields 7 bips higher. I must say, Aisha, that 7% inflation, when you think about it, way above the RBI comfort level. The equity market reaction yesterday was mature, and money markets which have opened today and the currency markets which have opened today after a one-day gap, the market reaction to inflation at 7% plus, there is no panic.
Not at all, yeah.
There is
in
just
fact, 83 is what we clocked earlier this week itself. So in that sense, after a day's gap, you're not seeing any reaction come by, at least on the currency. But Hemang, good to have you on the show. Thanks as always for joining in with all the ideas. And of course, since we were talking about the mid-cap ideas, let me take it across to Kunal and Naresh and get in their mid-cap strategies as well. Naresh, what's on your mid-cap radar?
So that would be a buy on Kalyani Steels with a stop loss at 430 and a target price of 520. The stock is setting up for a multi-year breakout. It topped out around 450 to 470 levels in 2017. Then in 2021, it made a recovery and went back to that 450, 470 levels. Now we are back at that 450, 470 levels, and over the last 1 month, in the move from 370 levels to 450, the volumes have been highest for the last 1 year. So expecting it to get into a fresh new uptrend, wherein we go towards 520 and maybe higher also in the medium term.
All right, let's move on and find out what Kunal's recommendations are from the mid-cap arena.
I'll go for a sell on Industar. That stock has shown signs of fresh weakness, breaking below that 170 mark, which was a key support on the short-term basis for Industar, and showing signs of a swing breakdown. So would suggest a sell with target of 154, stop loss at 164.
Okay, there you have it. Lots of top recommendations coming your way. Let's shift focus then to other headlines that we're mapping out across the globe. And the Maui wildfire death toll has now risen to as much as 110. The US President Joe Biden, along with the First Lady Jill Biden, will soon be visiting the affected area in order to assess the extensive destruction that has been caused by the fatal wildfires. Meanwhile, Tesla chief Elon Musk has said that Tesla and SpaceX are working to provide aid to the victims. Meantime, Greta Gerwig's Barbie continues to its record-breaking spree. It's raked in a whopping $537 million, becoming the highest-grossing domestic movie from Warner Brothers in their 100-year history. The movie has surpassed Christopher Nolan's The Dark Knight, which generated $536 million way back in the year 2008. And unwinding with action from the world of football, England has scripted history, defeating Australia in the Women's World Cup final. It was a showdown that ended with a 3-1 scoreboard. And remember, this is the first World Cup title for the England team.
Okay, and another fast food giant joining the likes of McDonald's in scrapping tomatoes from their menu, and that's Burger King this time around. Notices at two of their outlets read, "Even tomatoes need a vacation." As the prices of the ripe red vegetable continue to skyrocket, many eateries have resorted to the no tomatoes policy. Company's website urged customers to show some patience towards the move. Also, Chandrayaan 3 is one step closer to the moon, bringing itself to a near circular orbit, following which the lander has set the stage for the separation finally. It completed the fourth and final orbit, reducing round yesterday. After it separates from the propulsion module, it will accomplish the rest of the journey to the moon's surface on its own. And back home, death toll from the Himachal Pradesh landslides has only risen. Over 71 lives have been lost over the last 3 days in the disastrous flash floods and landslides. In fact, the Chief Minister of the state has called the restoration work a mountain-like challenge. Search and rescue operations are still very much underway.
All right, let's move on to the khabar on D Street. And Astral is going to be in the spotlight. It's bathware